Hello viewers, it's Isma as usual, back again from FX Kampala. In our YouTube video today, we're going to be looking at multiple time frame analysis. If you haven't subscribed onto our YouTube channel, please do and click onto the bell such that you do not miss out on any notifications on our videos that we happen to release every now and then. And you can also visit other social media platforms of ours, that is Instagram, TikTok, Facebook. Just type in FX Kampala. You'll find such amazing and affirmative information. Without any wastage of time, let's get directly to basically how to do multiple time frame analysis. By definition, multiple time frame analysis is basically looking at a single instrument or a single currency pair from different perspectives. With these perspectives, then we're looking at the different time frames. It can be the daily, it can be 1 hour, it can be 15. So you're basically looking at these versions, the different version of an instrument or a currency pair, to basically make sense out of them, rather than someone who basically that is going to come, just look on a single time frame, relies onto that, and basically decides to enter the markets. Secondly, why do we need to look at the markets in different perspectives? Reason being that if I happen to look, let's say if I'm trading in a 15 minutes time frame, looking at a daily time frame will help me get to know the general flow, the general market insights, the general direction of the market, where it's particularly going, rather than the short perspective, the small perspective narrative of it. Now, with this, you can ideally increase your profitability. Why? Because you now know where your market is generally going, other than the false movements that, or the pullbacks that are generated in smaller time frames. So with that, in our video today, we're going to go have a practical view on how one is supposed to do this the right way. And by that, we will now be in position to make money out of this. So with this way of market analysis, it's non-dependent rather on the style of one who is trading. So without any wastage of time, let's just go directly onto our chart, and we happen to see what I'm literally trying to tell you and show to you. So with us on our platform, you'll basically realize that we are analyzing USD Canadian dollar, and the time frame that we happen to be on is actually the daily time frame. So with us, we have identified an area of interest up here. Okay, an area of interest up here. Someone can call it a liquidity grab point. So with this, you would realize that it does not only stop here, but rather proceeds up further to these levels. Now, so once, like I've said, if you realize that we have an area of interest here. Someone might call it a liquidity grab point. Okay. But then our anticipation, our analysis, intellectual analysis, that this market previously moved up, and now we expect it to go further down, just as you see what I'm doing with my pen here. So we are expecting the market to come down. But now the time frame we're in, we are not, I would say, we are not position traders. It's only position traders that will go for such a time frame. But now, since we are not position traders, what we're going to do now is that now we're going to go to the next time frame, because with multiple time frame analysis, we're looking at least, if you're in 15 minutes, at least make sure that you look at least to at least two bigger time frames above the time frame you're in. So I would not recommend anyone to go to a smaller time frame, because since we talked of multiple time frame and you're trading in 15, therefore you could probably go in the 5 minutes time frame. So I would not recommend that, but rather just look for those that are bigger. Why? The general main reason as to why we go for a multiple time frame analysis or for bigger time frame analysis is basically to know ideally the general market overflow, the general market trends. Okay, so since that we have realized that this market is actually going to come down in our bigger time frame, so we have come to a conclusion that with anything that we probably might do in our 15 minutes time frame, it has to do with selling, because generally this market is coming down. So once we go to our small time frames, then what we have to do, or in our small time frame where we do the execution, what we'll have to do is to make sure that we look for perfect entry points for a sell based upon what we saw in our bigger time frame. So let me first rub off this, then we can proceed on to the bigger time frame. So our next time frame is going to be 1 hour. So you come to 1 hour and you see. But of course, we all know, so with 1 hour, we have ideally noticed that still it's the same thing that that is being told. And generally, when you look at this trend, it's a very, very good one. We are not going to trade in the 1 hour time frame. Reason being, our time frame of execution is 15 minutes. So we just are coming here for clarity and looking for ideally possible. If you look at this point, there is liquidity along these two candles. Let me maximize them for you such that you could probably see them very, very well. So if you happen to look at some point here, we have a lot of liquidity here. And where liquidity lies is basically where we can now place our orders, okay? So this is along this point now, what you're basically looking or seeing here is just weeks. And now we need to see something that is beyond weeks. We need to see something that is more than weeks to identify liquidity. So with that, to have that, sorry, I think the time frame had gone to 2 hours. So it is supposed to be 1 hour. So which probably also defines it very well. So after that, now we can go to our 15 minutes time frame. And in this 15 minutes time frame, I make sure that I get a good entry point. So you ideally realize that where there is liquidity here is where we shall put our, of course, our sell limit. Okay. So I'll come here based upon our multiple time frame analysis as a strategy or as a supplement or as a secondary indicator that is to do with your analysis. You're going to realize that we shall put our entry along that point where there is liquidity, and then we wait for the market to execute that market, and then the take profit can be even 1 to 4, 1 to 5, 1 to 10, because the general market trend is downwards, which is the main importance of trading with multiple time frame analysis. So as we wait for our trade to be executed, I've shared our contact at the beginning of this video. If you happen to find any challenges, if you want the mentorship, you can always WhatsApp us, you can DM us. We'll always be in position to respond to you. Or you can visit our the website, that's www.fxkampala, or you can come at our offices in Naja na Nkumbi. We will always be in position to help you out with the interest of time. Allow me stop from here. Have a lovely day. Bye-bye.